Welcome into my InvestEngine portfolio update. I am recording this in October, but we're going to be jumping into November, which I can't believe I'm saying, in just a couple of days. So we're running a little bit late on the portfolio updates at the moment just because there's so much going on. Now, as I record this video, we are just now a couple of days away from probably one of the most important budgets set by a UK government. So Rachel Reeves will be stood at that dispatch box, I should say, at 12:30 on Wednesday, going through all the different changes made to UK tax. Now, we are expected some fairly big things. Almost everything you could imagine has been speculated. I think fairly certain we're going to see some changes in not only capital gains, national insurance perspective from an employer perspective, we're certainly going up. I say almost certainly because anything is possible. And then who knows what will change around pensions and different reliefs there, or maybe even they'll disrupt and touch our ISAs. God forbid they don't touch our ISAs and SIPs, but everything that they do say, I will cover in depth over the next week or so. I'm planning to make a lot of content, at least covering it from an investor perspective, going into lots of those details if the worst happens or they make some of these big changes. So pay attention there. And I'll also be doing it live over on my Discord community. But you feel free to jump on that one and we can watch it all live together. Have it muted in the background if you like at work, all up to you. Now, just before we jump into my portfolio itself, let's have a look at the rest of the stock market. As I record this video, I'm sat here just in the US pre-market looking at that about to open. And it looks to be almost close or very, very close to a new all-time high, which seems to be a word that I'm saying a lot now. Whereas every single month when I'm doing my portfolio updates and all my different videos, the S&P 500, the US market, the biggest companies in the world are seemingly on an unstoppable rise at the moment. And yet again, many people will be calling for a market crash, a correction, and are holding back lots of money from the stock market because in their view, they believe stocks are overvalued. Are stocks overpriced and are they too expensive? Maybe, maybe not. The only way to know that truly would be to know the future and to know the cash flows and know the profits of those companies. I make no claims about whether the stock market is overvalued or undervalued. And the strategy I've chosen is the one which has been proven itself. And that strategy is to make sure that I invest regularly on a dollar cost average basis into low cost index funds, which I'll show you in a moment, the ones I specifically invest into on my InvestEngine account. Now, as I record this video, it is going to be a very big week for earnings, especially from big tech. I'll put that on screen now, who we have reporting. Now, I can't remember off the top of my head who's reporting on which dates, but we have the likes of Amazon, Apple, I believe, is reporting. We have companies like Robinhood. We have Google reporting as well. So lots of big tech earnings are going to happen this week. And depending on how that goes, will of course determine lots of the outcomes of the stock market. If we do have lots of beating of expectations and people doing well, the stock market may see another all-time high by the time I do this in just a month's time. One of the big earners coming out of the season so far was Tesla. You may have seen some of the enormous share price increases in Tesla, which is just a roller coaster ride of a stock to be an investor in that company. Really does test your mettle. If you're one of the investors in that company, do let me know in the comment section below. But that company saw a more than 20% rise across aftermarket trading and market trading so far, which is just a crazy number. And when you look at the amount of people trading those shares, it really is quite terrifying to look at. I think about a quarter or a third of the company gets traded in a single day, which to me is just mind-boggling. So much for people holding on long term when most of the money and most people in that stock are trading it short term, which is just crazy. Now, other major stories that I covered in my updates on my Vanguard portfolio, I did cover kind of UK inflation numbers, interest rate changes, and also from the US perspective, both generally heading in the right direction, inflation somewhat under control with interest rates set to come down. The next meeting from a UK perspective is November the 7th, if I've got my dates correct. And there is an expectation there that rates will be cut by another 25 basis points, taking them from 5% where they are today to 4.75%. Now, it is always possible for rates to be cut even further than that, with the Bank of England being kind of spurred on by some relatively positive inflation data. The last measure you would have seen, at least from a CPI perspective, was just 1.7%, which is under that 2% target that the Bank of England would like to see in terms of inflation. However, it is always important to remember that CPI is just one measure of inflation, and we also have CPIH, which includes some of the biggest costs we actually have as a nation, which includes housing. Now, we can go on a whole nother rant in the video about what we should kind of pay attention to The ONS, for example, much prefers the CPIH reading, but the Bank of England tracks CPI. And this will have a big impact on not only the finances of the government, who are going to report in a couple of days on their budget, but also on you as an individual as well. If you're remortgaging, we should see rates come down there. New loans for cars, for example, and then business finance too. So anytime rates are low, it's almost like money's free and businesses can spend and grow as they like. Now, the only other piece of news I wanted to go into was the big news coming out of the US that in just not long now is the US presidential election. Do I make any bets on what's going to happen to the stock market? No, I absolutely don't. In fact, I don't really necessarily care in the long term what happens, whether Donald Trump wins or Kamala Harris wins. Many arguments have been made that Donald Trump is kind of the favorite to win, at least from a Wall Street perspective. You have the news articles going around about the Trump trade taking place at the moment with people putting their bets on him. Certainly, if you look at the betting markets, they would have you fear that Donald Trump is leading the way by a significant margin. However, you have to remember that US citizens, at least to my knowledge, can't actually bet on the outcome of the US election. And the company taking that data from different kind of markets outside of the US, at least to my understanding, is Polymarket. And Polymarket is funded by an enormous donor of Donald Trump's campaign, Peter Thiel. So I would take all of this with a pinch of salt, and all of the polls, I think most people are saying it's going to be a very tight race. Very similar to the UK perspective. It's all about kind of that first past the post and who gets the electoral college in the different states. Many states are either going to be one way or the other, but it's those swing states and those tight battleground states which are really going to sway the election. I think whatever happens, it's definitely going to be a roller coaster ride. America, just like the UK, is very much divided from a political perspective. Now, taking this back from an investing perspective, I don't change the way I invest based on any elections. I couldn't care less who wins. From a long-term perspective, it doesn't really matter the colour of the party that is in charge of the US market or the UK market. I'm going to continue to dollar cost average into low-cost index funds, which invest in the world on a market cap weight. The bigger the companies are, the more my money will go there. As markets rise and fall, I'll be the buyer, no matter what the price is, no matter what happens. And this is the kind of route I've chosen to go down. If you want to predict markets and hold money back depending on the outcome of different things, then you're always welcome to do that. At the end of the day, that's your decision. However, from my perspective, I would rather just not try and guess and not try and time the market, because it is a fool's game. And I'm just going to buy on the way down, on the way up, and over the super long term, I'll get that long-term average price. Right, now speaking of investing, let's jump into my InvestEngine portfolio. As a reminder, I have my stocks and shares ISA here, and also a small self-invested personal pension that I'm regularly investing into. So between the two accounts, I'm putting in £1,000 a month into my investing. Just for reference, and for many newer people here, and I've said this quite a few times now, but my investing is the largest, my largest outgoing effectively. My mortgage doesn't get anywhere close to this, and no other bills, as much as energy bills have gone up, gets also nowhere near this. So, and I'm in that fortunate position because I have very little outgoings. I have almost no debt in my life apart from the mortgage, and I keep the costs in my life very, very low. So I know lots of people might think I must be some sort of, very rich person to be able to do that, but I do make quite a lot of sacrifices to be able to invest the way I do right now. And it doesn't mean I don't enjoy my life at all. And yes, I potentially could invest more, but I keep things relatively cautious and relatively low cost. And that's the way I choose to it. How you want to invest is completely up to you. So let's just jump into the portfolio now. And it should be, if I'm not mistaken, either close to or about to hit some new all-time highs, as you would expect when you're putting in money every single month. So I'll just go into my portfolio now in my ISA, which is Toby's World. And the great thing is now that we're getting lots more data, as the months roll on, you can see the black dots on screen where I've invested into this portfolio. It's a really nice, simple portfolio, which basically tracks the world. It's not perfect. As I've said many times before, I do share the portfolios, which you can have a look in the description as well. And effectively, it just invests in different ETFs around the world. So for example, most of it will be invested into the US market, and I use the S&P 500 as my guide there. I have the European markets, I have the emerging markets, I have Japan as my kind of Asia region, and then the FTSE 100 is kind of my UK region. Like I said, it's not perfect. There are many ways you can cut and dice this to suit your own needs. I've chosen this. I will balance if needed. I can always change if needed, but generally speaking, this is what I'm happy with. And my costs for this are super low. You can see here my total expense ratio on the platform is 0.09%. So that's a tiny amount of money in relative terms when you look at all the different costs of different mutual funds out there that you can invest in. So that's one of the biggest things that as an investor, I try to keep under control. Now, as those markets update from over in the US and our ETF prices change during the day, I will expect this price and this value of this account to probably go up and hit some all new time highs, which would be quite nice. You can see here, if I just go back through the 1 month chart, I think the highest was about here, about 43,482. So we're not too far away from that. But I think as the US markets open, I suspect we might jump a little bit above that. Now, just before we jump into the rest of the portfolio, don't forget, if you do want to get yourself started with InvestEngine and open up an investing account, whether that's a stocks and shares ISA, a self-invested personal pension, or even a business investing account, which is a further video which I did to do in the future, you can get a nice welcome bonus. If you deposit £100, do check the rest of the terms and conditions, but you will be given a bonus between £10 and £50. All you have to do, like I said, is just click the link in the description below to make sure that you do get that. And thank you for all the people who have done that as well. It does help support the channel and get you a bit to get started too. Now, in terms of performance, I think it'll be no surprise here, as you can see those big green numbers, where most of the the returns have come in the portfolio. And your portfolio, if it's a kind of global portfolio, will probably reflect this pretty much identically, that most of those returns have come from the likes of the S&P 500 and those big cap stocks headquartered over in the US that sell all of their products and services globally around the rest of the market. Some of the other places around the world have done okay. The emerging markets, I think, have had actually not too bad of a year here, up 15%. Europe's held together quite steady there. And then also you have to admit that the FTSE 100 has been doing okay. Remember that all of these are accumulating ETFs, which means that no dividends get paid. So just in case some of you might be thinking, well, hang on, the FTSE 100, when you look at a price chart on Google, that doesn't include the dividends that get received. Well, these all include those dividends because they get reinvested. So what you're seeing here is total returns. I don't get any dividends paid to my account. There are versions of these funds, if you do want to get the income versions, where you will receive that dividend into your account. So for example, if you are investing and you want to see that income come into your account for whatever reason, or if you're using a general investing account, it's completely up to you. There are different versions which you can go through and have a look there. I'll just jump into the S&P 500 here, represented by VUAG. And what I really like about InvestEngine in my account here, you can see now all of the different dots as I've invested. And because I just invest regularly, I don't care whether the market is high, low, sideways, up or down. And what I really like here is actually, I can see that during the period of the last 6 months, for example, I've, it looks like I'm some sort of market timer, but I've just got lucky here that I've hit some of the lower points, some of the peaks. For example, the 2nd of September was, a terrible time to buy apparently. And then it took a couple of weeks to recover. And then a couple more buys went into that account and it's kind of gone on from there. I don't look at the price. I don't care what the price is. I get that long-term average. And if we zoom out here over the year, I think this is a better visual representation of, I think, what the real journey of an investor is like. Investing, remember, is not a one-time thing. I do get a lot of comments asking all the time, is this a good time to invest? The market's at an all-time high, for example. What should I do? And in my view, it will always be a good time to invest as a long-term investor and always a good time to start. Remember, I'm not your financial advisor. You should always do what's right for you. But for me, it's not like you get given your money and it's like you have to make the right choice. For me, investing is a regular thing. As I get money, as I get paid, I'm going to invest regularly. And my time frame is monthly to get invested. And I'll be doing this for decades to come, both in ISAs and pensions. Now, let me just jump across to the pension. And also while I'm doing that, as a reminder, all of these little portfolios you see here with no money, and you think, okay, well, what are you doing here? These are different portfolios that I have saved and I do share them. I've shared them across different videos just to really give you an inspiration. Again, like I've said before, it's up to you to make sure you find what works for you when you are an investor. I just like to try and inspire people and give them some ideas. So these are kind of some places that you might want to start. I also share Toby as well, so you can play around with that as well. Now, if I scroll down, you will see the pension section. This is a much smaller part of my pension, and the largest part I keep over on my Vanguard account. If I just have a look now, you can see that I've got the savings plan set up, which is just a regular investment going in at £200 a month. Now, again, it's quite nice as we've been investing now for a few months into the pension. You get to see all the purchases that I've made into that pension. Now, because I'm investing as a personal individual into this pension, you do get the top up from HMRC. So every £200 I put in, another £50 gets claimed back from the taxman. So I effectively get the tax relief back, which is really, really nice as a basic rate taxpayer. If you make any more than that, the current rules stand, you can claim back. Whether that changes on Wednesday, I don't know. I've gone into detail on that in other videos, so I won't cover that at the moment. Now, what's quite nice is you will see the main buys that I put through at £200, but you will also see these £50 buys which come through. So as soon as that money hits that account, I've got auto invest turned on. So as soon as that money goes in there, it will get automatically invested into the portfolio I have set up. And as many of you will know, many regular viewers know, I keep things super simple. I don't lie when I said it's a super simple SIP. It is a super simple SIP, which is quite hard to say very quickly. I just invest in the FTSE All World Fund, VWRP. It's the accumulation version. It gives me exposure to the whole world pretty much from a perspective of you get everything. So let me just scroll down actually, because I don't think you do this too much. Another good feature of InvestEngine that I quite like using. I can see inside this ETF all of the different companies and the regions of the world. And because it's a global index fund effectively, you get exposure, or you get, a small slice of these companies. Now, I wish I owned 4.1% of the total of Apple, but of course I don't. I just own my share of that 4.1% in my index fund. But you can see here, you can go through the holdings, so you can see that when someone asks you, do you invest in NVIDIA? Well, if you're an index fund investor, and probably through your workplace pension, you almost certainly will be an investor in NVIDIA, in Tesla. One video I should do probably is go through all of the money I have invested in my different accounts and work out actually from a pound perspective how many shares I have of all these companies. Because it is quite nice to see, I say this a lot and I know I repeat myself in some of these portfolio updates, but investing definitely can get quite abstract and you think you just see money on a screen, but that money is real money going into these companies, owning real shares of these companies. And I was speaking to someone the other day and I was trying to kind of get this across, and every time someone goes and buys a new iPhone, for example, you're entitled as a shareholder to 0.00, 0.1%, something like that of those profits. I think that's a good way to think about it. Likewise, if I don't know if it's exactly in this fund, but think about the big supermarkets, for example. Every time you go into Tesco, if you own a global index fund, there's probably some Tesco shares in there somewhere. So every time you go in and do your weekly shop, whether it's at Tesco or some of the other supermarkets, you are entitled to a small slice of that as a shareholder. So, when you're doing your shopping next and you're buying some of these things, or you're using Amazon, or you're browsing on Facebook, as a customer of theirs and an investor, you are benefiting from that as well in a very small way. But it is good to remember that that's actually what's happening under the hood when it comes to investing. Now, as a side note, and again, do let me know in the comment section here, but I do actually need to do a full video, and I've been promising it for a while, but I will do a video on investing your business cash, because I have another account on InvestEngine where I do invest my business cash, so I can log in to that as a separate entity and invest the cash from my company as a limited company. And I am a kind of big advocate of making sure that you do that as well, because money sat there in a bank account doing nothing. Likewise, if you have money sat there as an individual in a savings account getting nothing in a current account, there are ways to make money from that as well, and different ways that you can invest. So totally different video to talk about there, but we will get around to doing that. Let me know in the comment section. Anyway, that is my portfolio for this month. Loads to cover this week in the budget. I'll see you there hopefully on Wednesday evening. And until then, happy investing.